Well, it's now time to turn our attention over to the grain markets. On Wednesday afternoon, we had the chance to catch up with Barchart senior analyst Darin Newsom. Well, let's size up what's going on, particularly in the corn and soybean markets. As we look at those markets over the past couple of weeks, Darin, it's been a sell-off of sorts. What's happening?
We've seen a lot of fund selling hit these markets. And in fact, I mean, if we look back at the CFTC commitments of traders reports, legacy futures only is really the only one that matters. We've seen massive liquidation in both markets, but predominantly in corn. So much so that with the next report, I'm guessing coming out Friday afternoon, I would not be surprised to see funds holding a net short future position in corn for the first time since early August 2020. So, I mean, we've moved from a large net long to a small net short. And so, this has put pressure on the market. Have fundamentals changed that much? A little bit. We had, we've seen the spreads indicating that we've had, quick planting going on early, possibly more acres getting put in. And now we'll wait and see what the weather is. But fundamentals still have not turned. They're still bullish. So that hasn't changed, both old crop and new crop. And so once the selling finally let up, once the long liquidation finally let up here midweek, all of a sudden a few buy orders came in, then some short covering started to happen. And like so many markets, particularly if we go back to Wednesday, so many markets, it looks like a stampede got started, and now we'll see how long it lasts.
Yeah, I think you're referencing wheat in particular there as we look at how it closed on Wednesday. Complete turnaround of how that market has been trading thus far. And Darin, as you and I often talk about, the winter wheat crop is just not there once again this year, is it?
No, I mean it's gone. I talked to folks out in the southwest part of Kansas, and their crops already been zeroed out. They're already going to work it up, and they're going to go into something. They're going to probably go into some dryland corn. It's a corn deficit area. A lot of feed yards that need some feed. So my guess is it's going to go mostly into dryland corn. So everyone was talking about, okay, so this latest rain, did it save it? No, because the crop's already going to be gone. But what it did do is it makes a better planting situation, an early growing situation for a new crop, for a dryland corn crop. So we'll see how much of that happens over the coming weeks, but it's certainly not going to help the dead wheat crop.
Yeah, at least gives you a chance on that second crop. Darin, I'm curious, what, from your perspective, when you look at this activity from the non-commercials, the investment fund side of things, what's that tell you?
That is a tricky question because we've seen this isn't just grain and oilseeds. We're seeing liquidation occurring in energies. We're seeing it across a number of key commodity sectors. And so there's a couple of different ways we could argue this. One, the most talked about is everyone's worried about the overall global economy. I'm not sure that I buy that. To me, it's more of a factor of we see that the U.S. stock index markets have turned higher. And so that being the case, I think investment money is flowing back into stocks. So, the old saying, sell in May and go away just simply isn't true. If we get a little bit of a sell-off here in early May, I think you're going to find money continuing to come into stock markets. And then with the Fed this week, raising interest rates another 25 basis points, but the key being they might look at slowing or possibly, the Fed fund futures forward curve, always fun to say, indicating that we could see a decrease in July or maybe August. Then that just gives more fuel to the money going into stocks, into bonds, and out of some of these other investments like commodities.
Yeah, I'm glad you brought up interest rates. I was going to toss that to you and say, stop me if we've talked about this before, Darin, because we have. It feels like that's something you and I bring up each time we talk. As we continue to look at the grain markets here, then we'll pivot to a little bit of livestock. What do you make of the long-term fundamentals in corn and soybeans?
Long-term fundamentals are still bullish. They're not as bullish as they were. If we look at the Dece March corn spread, it still has a relatively weak carry. Just to compare that to Kansas City where everything's inverted, so we know that's a much more bullish situation. But the Dece March spread, it has a weak carry, March, May, and so on. Similarly, the Nov, Jan, March, May soybean spreads also showing a weak carry. So we know long-term fundamentals are still, I'm going to call them still bullish. They're working their way towards neutral, but only because we're getting into that time of year where we're getting planting done and weather looks to be a bit more favorable. So it hasn't changed that much. Still looks like we're going to be dealing with some tighter supply and demand as we make our way through 23-24.
All right, let's talk lean hogs and we'll close out on cattle. Have we finally seen a bottom maybe put in when it comes to the lean hog market, Darin?
Every time I want to say that the bottom is in hogs, they go lower. They dig another hole. It's very hard to do. We've got selling coming from every direction in the hog market. So I'd like to see the hog market find a bottom in here. Be able to start rallying, find some buying interest of some kind. I just don't want to be the first one to jump in there and say, yeah, this market's turning. I don't want to be the first one to buy into hogs, particularly if we can't get the big money to follow along.
All right, we'll end here. When it comes to the cattle complex, you're looking at box beef prices. What do you want to share with us this week?
To me, box beef is the key economic indicator for the U.S., and we've seen it just incredibly strong. We've seen select going up over $300. We've seen large gains for the last number of months. But here, as we're making our way through the early part of May, it has softened a bit. So, we'll have to see if this is a trend that develops, and if so, maybe we're finally topping out this boxed beef market. Odd time of year for that to happen, but we'll see. And if so, will that have a ripple effect on the cash market and ultimately on the futures?